Good afternoon. I'd like to welcome everyone to the March 17th, 2026 Radnor Township School District Finance Committee meeting. First item on the agenda, introductions and administrative remarks. Mr. Pawling?
Hi, I just have one. I just wanted to thank our student representative, Nora Ellis. She stopped by the business office last Tuesday to sit down with Ms. Klaus and myself. She had some great questions about our finances and even sat in on our pre-committee preparation meeting. So hopefully you got a lot out of that, but I just want to thank you for taking the time to come over, and hopefully it was a good use of your time.
All right. Second item on the agenda is public comment. This may take a while.
We have a recorded comment.
Oh, okay.
It was Arthur Sherry. I reside in St. David's. I'm a retired CPA. In all my years as an external auditor, never seen inequality as egregious as what I see at RTSD. 4 out of our 5 head principals are men. 7 out of 11 central administrators are men. The majority of the highest paid employees in our RTSD are men. Not a coincidence, it's a pattern. I'm asking for co-principals at each of our 5 schools, a man and a woman. Equal pay, equal title, equal authority, and a female co-superintendent, modeling true partnership for every student. Kelly Bourne is the assistant principal at Wayne Elementary. Well, let me be clear, she's Millie's assistant. She's extraordinary, an educational leader of the highest caliber. My niece and nephew adore her. She's already been a head principal for 4 years. With respect to Principal Marzano, who's doing an amazing job in my opinion, Kelly has earned the right to be his co-principal. Our superintendent's budget increased $56,000 this year to $715,000. Who decides that? At the same time, many paraprofessionals, custodians, and cafeteria workers make under $30,000 for the entire year. Let me tell you about 2 of them. Mary Ann, a lunch lady. She's there every single day to lift students up, offering them with a warm smile, which is made with more but a kind word. He makes children feel seen, appreciated, and heard. And he keeps forgetting CP. The paraprofessional at Wayne Elementary, he certainly doesn't forget anyone. He knows the name of every single student in that building. Every one. When I taught at West, every time I saw him, he was encouraging, empowering, and spreading joy to students, going above and beyond his job duties. Under $30,000 is an unlivable wage. People are forced to work other jobs just to survive. Consulting. Are you telling me the value is 4% of our superintendents? We have a budget of $125 million. We can do better in Radnor, and we must. I don't care if you have a PhD. I don't care if you taught 30 years or 30 days. What are you offering of value today? What are you doing right now for our children? This is Radnor. These schools are funded by our tax dollars. I see structure that value the old boys club at top while people doing real work struggle. Our football budget increased 55% this year to $173,000. That's 40% of our entire sports athletic budget. The most dangerous sport, the most concussions, the most CTE. Former athletes are suing districts across the country. When the lawsuit comes here, and it will you answer for your vote supporting the budget? Will you hold yourselves personally liable? Our girls' sports receive significantly less, 50%. Not equal. Fixed it. Equal access. Equal facilities. Equal coaching stipends. These girls deserve to know they matter and are equally valued as their male classmates. Raised by women, I will always defend them. I'm done sitting idly watching them receive less in my own town. I'm done watching Kelly, with head principal experience, called an assistant. I'm done watching Mary Ann struggle while executive dollars soar. 7 of the 9 school board members are women. You have the majority. You have the power that changes. Support you. So please find courage in your heart to do what is right. Establish co-principals and a co-superintendent. Give Kelly and the other with me assistant principals the titles they earned. Before you vote on a budget that pays a superintendent $700,000 in the research work, if it's who we are, our children are watching, please do what is right. The time is now. Thank you.
Is there any other public comment? Okay, seeing none, we'll move into item 3, review of the minutes. Committee members?
They looked fine.
Okay, thank you. That moves us into the agenda items, number 4.01, action items. Mr. Pawling, any comments?
I'll just spend a few minutes going through some of the items. I did want to note that we made an adjustment to the financial reports. There was a formula error on one of the fund summary reports, which we did provide an updated hard copy, and we will update that electronically in board docs for the agenda for the full board to approve next week. We have 2 contracts, one of which I'm going to request that we remove from the agenda, which is the visual sound purchase for the high school. We've received some information from Mr. Dietzler today that requesting some changes to the equipment that is being requested. So I'm going to request that we pull that item off of the agenda for this evening. We have the budgets for the Delaware County Technical School, which did see a substantial increase from 25-26, but it's based on an average for students, and we did see a large increase of students being factored into that from last year to this year from an attendance standpoint. So that did affect the contribution share that we have for the technical school budget. And then we also have the intermediate unit special education budget, which is based on a cost of services and then our utilization of that we are estimating for next year. As well as the operating budget. Another note I'd like to make on the hard copies that you might have, we had $331,144 listed as the technical school budget. It's actually $333,144, and I did make that adjustment to board docs, but your hard copies that you received previously may have had the incorrect number on that.
No, it's
So,
great.
yeah.
Oh,
Yeah, so board docs, the electronic version's updated, but the hard copies may have the old number. And then we have 2 donations. One is to establish a scholarship at the high school from Wayne Cares. And then we have a book donation from the author from Adventure on the Serengeti, and she is donating a copy of each of that book to each of our elementary schools. So with that, I'll open it up if there's any questions that the board might have on any of those items.
all right, thank you. Anybody have questions?
Well, I just want to say, I'll be curious to hear what the change to the visual sound is. Dr. Batchelor knows this, but after the musical a couple of weeks ago, I had told Dr. Batchelor I wanted to reach out to Mr. Dietzler about the sound at the high school, and he very graciously, we took a walk through there yesterday, actually, and I learned something really interesting, which is that the original plan for the auditorium renovation a long time ago, the original plan called for us to actually dig down and drop the pit below, and that's not happening, don't worry about it, but some of the sound challenges in the auditorium are actually come from the fact that the pit is at ground level, and, so we're dealing with some constraints there. And so he and I met yesterday, and, it'll be interesting to see if maybe they're taking another look. He told me it was a fabulous process, that he was a, real integral part of it, but I really strongly advocated to him yesterday to, really give it another look if we really want to make sure that we're able to, when our students sing and perform, it's really important that when those kids have that one small cameo or, there's the kids put in a lot of effort. And we just want to make sure the sound is everything it can be. And so anyway, I'll be curious to see what the update to this proposal is.
Yes, and so I was not provided detail, but Mr. Dietzler did reach out to Dr. Hand with some information. So we will collaborate and work on making any revisions to that proposal and present them to the committee next month.
Yeah, and I don't think it'll be calling for apparently it was going to be jackhammers or dynamite or something, which is the reason the school did not do that 25 years ago. But it's been well over 20 years since we've done a major sound upgrade to the auditorium. So I'm really excited anyway. Thanks.
All right, anybody else?
I had a quick question about the, and you may not know the answer, but it just noted that the DCIU budget was really different from last year to this year, and I was just curious if,
Oh, the decrease.
yeah, I mean, big decrease. Is it just cuts, or how does that work?
Yeah, from my understanding, I don't believe there were programmatic cuts. I'm going to go back and double check, and it could be related to just a cost share. And so when we met with the intermediate unit last month at our monthly meeting, they didn't highlight anything significantly to us that would be, like a decrease in services or anything, that they were cutting back on. So I'm just going to take a look here and see if I can, quickly identify what that is. But to my understanding, there's no large cuts that are associated with that. And I think their overall budget, from a district contribution standpoint, is flat. And then there's some additional things that we contribute as part of that for different programming. So I can check on that and get back to you. But to my knowledge, it's not like they're cutting out a specific program or anything large that would impact the students from an educational standpoint.
Great. No need to get back to me. I was just curious if there was something that, ticked off in your desk, on your desk, made you think, wait, what happened here?
Yeah, and it could be too, and I'll take a look, because they do get revenues from other sources than the sending district. So if their budget hasn't increased substantially, or they have other sources of revenue, whether it might be grants or something else to offset that, it could potentially lower the district's contribution towards that. So I can get a specific answer and follow up with everybody on that.
Is that the budget that's a function of how many students we have as a percentage of the overall student service by the DCIU?
So that's part of it. The special education is also based on that, and that's more on a specified services standpoint of that. But I think that this is just based on a contribution share, and this one. Again, I'll have to go back and double check and see if this is the one that is calculated on like a market share. And I might be thinking of the community college when we do it based, I'm getting them all confused now. The community college, I think, is based on our aggregate market value, and it's how it's calculated. So I think you're correct that this one is based on more of a student contribution than the way that the community college is calculated. Yeah.
I'm almost positive it's on students that attend.
So if you look at the, so the one that Ms. Girton just kind of highlighted, which is the second of three, right?
Right.
So on page 2, you can see that, the revised budget and the estimated revenue were like about 27-ish for last year. And this year, they're increasing to 31. So if we had the same share, then clearly our number would have gone up.
Mm-hmm.
So it's definitely driven by our lack of participation, let's say. Oh, sorry, I wasn't sure if you were.
I'm finished.
Yeah, okay. So the one comment, and, Mr. Pawling and I spoke briefly about this, was the way that they sort of determine the percentage allocation. It seems like it's based upon 2 full years, prior years, and then a stub year for the latest one. But I guess, like that methodology, I'm kind of just questioning in general, just because it's potentially not as accurate. Partly because if you look at each school district and the stub year, it's actually not a...
I'm sorry, what's this term you're saying, stub year?
Stub year is like partial year.
Thank you.
Yeah, it's partial, as opposed to a full year.
And Mr. Lee, I think you're referring to the technical school, because
Yes,
when they do
yes.
the ADM calculations, they do 2
Yes.
full years.
Yep.
And then the third year is based on the current year, but only the first 45 days. And so I think when we were discussing it, it's basically just an average of the three versus a weighted average of only accounting for 45 days of the third year.
And so normally, it would not be an issue, I would not necessarily have an issue with it, but for the fact that each of the school districts, the partial year, the 45, based on 45 days, is actually quite different than the full years. So there's no stability in the numbers. So I would think that that's in the best interest, if everybody wants to pay their fair share, that they would change that methodology and not put so much weight on this 45 years. Because basically, school districts potentially could be gaming the system, if you will, and changing and seeing how their student body could potentially impact that number, therefore decrease it and get a slower allocation.
But it's going to get picked up in the next year, the next year's three-year average.
Right, but it's still going to be the same methodology of a partial year. So it's our allocation this year is based upon these hard numbers that I don't think these are necessarily going to be changing. Next year.
I'm not sure. Well, I think I know where you're going, but I think I know where you're going, but I think it's here's a piece of information that we don't have, which I think might inform the extent to which you're saying that three-year average may not be accurate, is if we were to compare the 45-day, 25-26 number to what the actual year-long number was, the closer that the 45-day number is to what the actual number is, the less we are impacted by what you're talking about.
Yes.
If there are large swings in the number of students over the course of the year, and the 45-day is just capturing a particular moment in time, I agree with you. And if there are large swings every year. So a piece of information that might be helpful for us to ask them before kind of advocating for them to just change their process would be to say, could we see maybe the history of what was that 45-day number and then the year. So for instance, we could look at last year's budget and see what was the 2024-25 45-day number. And this year it's the full year number. And, we could look back a couple of years to see, is there a big swing between the 45-day and the final number? And I think that would, I'm not sure that there are the big swings in population, and maybe there are. I don't actually know. So to your point, if there are big swings, it is impacting the numbers. If there aren't big swings, it's not impacting the numbers. So that might be the piece of information that would be helpful to have. Does that make sense to Brian and Missy? Do you hear what we're saying?
Yeah, it does. And so without looking at the data, I would imagine that there's probably years where, we I don't want to say there's winners and losers or benefit or loss, but there could be years where there's shifts that we pay a lower cost share because of the calculation, and there may be years where we pay higher because of the calculation. And I would think over time, it would average itself out unless we were seeing our data being continuous while everyone else is changed. So that's just an assumption I'm making without going back and looking and tracking each year. But there's probably years where the way that the calculation works, we would get some savings based on the aggregate, and other years because our numbers on those 45 days went up, like this year, where we would be paying more of the share, and whether recalculating it with a weighted average or not would help that. There may be years where it does and it doesn't.
And these are some of the questions we could also share with Mr. Thornton, too, as he sits on the board.
Yeah.
Yeah, exactly. And, I'm making an assumption here, but again, it's another question to ask. And every once in a while, Tom, just to your, every few years, we have occasionally have had a representative from the DCIU come and do a presentation to our district, to the board. We probably haven't done it for a number of years, and I'm not necessarily advocating for that because I do think that Mr. Thornton could be a really good resource for this information. But, again, to your point, Mr. Pawling, the numbers could sway either way in terms of whether it gives us an advantage or disadvantages us. But I guess I was assuming that they were trying to capture the most up-to-date information that they can in trying to budget for next year. So they use the first 45 days of this year, whereas they could just as easily use 22, 23, 23, 24, 24, 25 and get a three-year average. they could do a full year. And for some reason, they've opted not to do that. Don't really know the reason why. And it may be, they, like us, Mr. Lee, probably begin working on their budget. Well, let me say it this way. They're presenting their budget to us now, and I know that we have to approve this at least a month earlier than we approve our own budget. So however early in the season our finance department starts their budget for the next year, they're working that much earlier and communicating to 15 school districts. So it may be the way that they're trying to capture as recent information as they possibly can, because they have to work so far out in advance for the timeline of their budget.
Yeah, so I'm most interested is just accuracy. Okay, and in this particular case, Radnor, the 45-day, number is higher. And as a percentage, it's significantly higher than the prior year. But then again, there are many other school districts that are potentially in a similar kind of situation. So it seems a bit capricious, really. What I do, I would not necessarily use a 45-day and think that that's a green number, meaning it's immature. I wouldn't necessarily put it as a final number, because that's basically this is a contract, I assume, right? And we have to approve it. So these numbers, once it's approved, it's done. It's contractual. So I just don't see how, this is an accurate snapshot. That's all.
Ms. Solomon, let me ask you a question. I know you won't be voting on the budget and all that, but anecdotally, what I'm seeing at the bottom of this is even looking at the 3-year average, the final 23-24 number to the 3-year average, less so 24-25, but there's an increase in the number of students. And kind of glancing down, there's an overall increase in the number of students in many of the programs, not all of them. Have they grown their programming there? I mean, it could be, Mr. Lee, that the reason we saw a jump from 22 to 36 from 24-25 to the 45 is that there may be more, and we've advocated, and I think we've heard anecdotally that they've tried to grow their programs and they've tried to make them more relevant and appealing. And because this technical school is serving a different population, a different need than the special education department. But
Right. So,
you share with us, please.
well, this piece is totally separate from my division, but I don't know the answer to what you're seeking. I suspect that there's more Radnor students that are taking part in those programs this year, but I'm sure we could find that exact answer. Somebody knows how many, right?
Yeah, I mean, the 36 student number would be accurate on what they're seeing through those first 45 days from a participation number. I think it's just the question of, how is it calculated, and it's not weighted, it's not prorated for that partial year. So if you have the increase, it does potentially skew our share because we went up for 45 days versus two full prior years before that.
But Ms. Stern's right. It's going to even out. If you're taking a 3-year average and you're doing it next year, and our number goes up or down, it's going to be captured in the 3-year average moving forward.
Well, it sort of depends, because next year's 4-year average is going to impact next year's numbers, but these year's numbers are still going to be fixed. So it doesn't matter whether, we get the full number later. It's what happens now, and right now, this is basically like an in-force view, like a snapshot, that's all.
So it has to be that way because.
Oh, no, I
budgets
understand the process,
right.
yeah.
And we don't have the data, so.
Yeah.
But again, it gets
Yeah.
back to, if we were to look at the final date, I think that the data point that's relevant, to your point, all the things you're saying, the number is green and all those things, completely accurate. What's relevant to the extent that it impacts us is how much of a deviance do we see, or deviance do we see from the 45-day average to the actual year-long number for our district?
And
Do
you
we
know
see a
what?
big swing
We
in
can capture
overall?
that because we have it from the previous years.
Mm-hmm.
So we could actually answer that. Like if there's wild swings from what the 45-day was last year's budget in 24, 25, and then from the previous year. So we would have a few data points anyway
Yeah,
on how close it
yeah, we
will
can take a
be.
look at that.
And then we'll know, next year how close this was, but
And then I guess another general comment is just like, I think this budget, like all three of them really that are submitted to us, I don't think we really have much say. It's just a question of whether we go along with it. So it's not like they're looking for our input. I think Mr. Thornton's probably the only one that can maybe scrutinize because he's on the board.
well, you can submit questions to him. You can attend their board meetings, which I think are the first Wednesday of each month. And this is going to be a roll call vote. So, each person on the board could have a different opinion about all of these. So, no, I wouldn't say anything should just be nodded and rubber stamped. Yeah.
No, but you're right, to the extent that Mr. Thornton is our, he's the voice of our board, of our district to this board, and I am quite certain that he is a strong advocate for us. And if we had thoughts or, concerns or questions or what have you, he is a really good avenue for us specifically. And then, they're approving these budgets as well. But you are largely right. It's not like we're going to sit and give direct input as a board. We will do that via our representative to this board, our delegate. Actually, it's more of a delegate because we actually voted him in.
But the same thing with the community college. These are county-wide organizations, and so we're one of 15 members, but I think that it's great that you're taking an interest in scrutinizing it and asking questions, because I think some of the other districts, don't have the time or the bandwidth to do that. So it's another way that Radnor could be a leader in our county. Any other questions about I guess these are the action items that will appear on the board agenda for the business meeting? Anybody else? Comments? Okay. That moves us on to 4.02. Mr. Pawling, recommendations for the audit?
Yes. So as we've discussed at the last few meetings, we are in the third year of our agreement with CLA, Clifton Larson Allen, who's our current audit firm. We are still awaiting our audited financial reports for 24-25. We've been told by them that we will have them completed in April. I have been in conversation with parties such as Moody's and others who have requested our audited financial information and let them know of our delay and sent them what we have to this point. So when we have a further update on that, we will provide it. The second part of that is we had also talked about issuing a request for proposals for an audit firm moving forward. So beginning with the audit for this current fiscal year for 25-26, which we would begin, really over the summer, and then they come out, usually in late August or September to start auditing our numbers for the prior year. So we did issue requests for proposals to 4 audit firms. 2 of them responded to us. And let me start off to saying we did vet the 4 firms, either through personal experience that Mrs. Klaus and I had with the firms or through references. So because it's a professional service, we have the ability to kind of pre-vet who we would want to have participated in this. Two of the firms, regretfully, declined to respond because they just didn't have the bandwidth, from their schedule, and they didn't want to overcommit themselves. And so we respect their, response in providing that to us, and still hold them both in high regard. We did receive two proposals back, and when I say this was probably one of the hardest decisions we've had to make in my 4.5 and your 3.5 years, the proposals were nearly identical. The pricing was, within a few $100s of each other. The references were impeccable by both firms. We both have, confidence in the references that we received, and, our experience with both firms. So, we really just looked at a couple of factors as far as, the proximity of the references to southeastern PA. We looked at the portal and the mechanism for uploading our financial documents to them. Really minute type of details, and just some things that we asked them about in interviews. And so our recommendation is awarding the contract with Malley LLP, who is a substantial firm. We talked to them about our current issues and their bandwidth for should a similar situation occurred, and so we reviewed support from the global Malley community of how people could fill in if we had a dip in service. We also talked to them and issued an addendum that would, if our audit is not complete by January 31st, we would have a fee reduction of $1,000 per month beyond that, to get that in writing, that if it wasn't delivered on time. But in talking with them, we fully expect to have all of our numbers back by December so that we can do everything that we need to do, and even prior to that with the state, and get us everything we need to, and then present that final draft to the board no later than January of each year. The fee has increased. So, going from about $23,500 this year to $43,000, there's a sizable increase, but I believe it's based on the resources that they're going to be providing, both on-site and off-site, from a labor perspective, to ensure that there's enough people working on this, that we get everything completed on time and accurately. So that is our recommendation. We feel very confident in the recommendation and comfortable from our standpoint as well. So we'll just open it up if there's any questions or comments about the process and our selection of who we're recommending.
Okay, I guess first comment is I want to commend Mr. Pawling for reaching out to Moody's, and in particular just being proactive in managing the fact that we don't have any audited statements. I flagged it as a concern, and we spoke briefly about this. And the concern really is the fact that we are about to issue a significant amount of debt. And so sometimes, if an organization doesn't have audited financial statements, they'll look at that as either a red flag, or they'll penalize us in some way. And here, he proactively managed the relationship in saying, look, this is not our fault. So I think that's, that's to be commended. I think that's wonderful. Secondly, the audit fees, especially if we had many that didn't respond, and two that were very close. Maley seems like, I think they're like one of the top, 150 or something like that, right?
Yeah. Mm-hmm.
And basically, maybe this is what we do. You get what you pay for.
I'm glad you said that. Thank you.
So, okay.
Thank you for making that comment.
So CLA, I'm always in my brain, they're going to be BBD.
And then with them, and then CLA, yes.
Yes.
Uh-huh.
So, I appreciate, I know it's been a long, frustrating process. I know that it does not feel good to you. This is not This is making you twitchy, I'm sure.
Should see how it's making her.
So I echo everything Mr. Lee said, and thank you. You have far more experience in this world, so I appreciate your comments on that.
So I recall that we went through this last year. Weren't we late last year and we were given assurances and promises and people came to talk to us? So,
Your recollection is correct.
okay, so I guess the past is the past, but is there anything moving forward that we need to learn from this? That
Yeah, I think there are some things that, we identified, some, and really it comes down to staffing bandwidth. It's just like every industry, right now where they're facing, especially like with in our profession and others, we see there's pipeline issues, right? So we used to see an overabundance of people in, auditing firms and, finance kind of come into our world. We're not seeing those people and they're not seeing them either. So there's really a pipeline shortage across the industry. We really reflected and had a lot of questions for both firms that we interviewed on how they would handle those issues, and talked about different scenarios with them on how we would compensate, how they would compensate for that. So I think between working through the schedule, being upfront with our expectations with both of these firms that we interviewed, and just really being transparent from both sides, which we appreciate from both of the respondents on, their bandwidth and ability. And again, to the other two firms that didn't respond and were honest with us that said, we just don't have the bandwidth. We don't want to take on a client for money when we're not going to provide your expectation on a deliverable within your time frame. So again, we commend those two firms for being upfront with us to say we can't take you on right now because it would be a detriment to their existing clients. So I think we just kind of learned a little bit about what we could do proactively to ensure and maybe look for some of those signs and then ask the right questions about how they have support on the back end, if, our manager who's on site would leave midstream, like how does that get handled? And so who would they bring in to do that? And I think in both cases, we felt there were redundancies and backups in place, that there was a team of people. We weren't speaking to one person. It was a one-man show and they were coming in and doing everything. So we felt comfortable with that. Or one-woman show. I'm sorry, I didn't mean to genderize that
One accountant
specifically.
show.
Yes, thank you.
Does the audit happen on site?
A portion of it does. I can let Missy talk a little bit about the process for that.
It's a combination. They usually come out in June or July to do a pre-audit and pull some of our current year items. And then they come back in and do the field work in September, October timeframe. Everything was completed by us and to them by November. A little different nowadays because they do have everything that you can upload all of our documents to a secure cloud area that they can tell us that they've received it and they're done with it, which is very helpful. So this first year, yes, we're going to have them on site again because it's the first year, but I am more than willing to work with them that they request the documents and we maybe only see them once or twice instead of for a full week.
I do have, so one important function that they are supposed to perform is actually sit and interview the board president. And so I don't know if that's written into this contract. It did not happen in one of the challenges with this transition when BBD became bigger and bigger is I found out after the fact that didn't happen. They were supposed to make the appointment, and actually they're supposed to do it in a way that it doesn't even involve the finance department. So they make the assumption that the auditors are doing their job, and then it came up in a casual conversation that had not happened for a year or two. So I do want to make sure that it's a check and balance, Ms. Girton, it's the board's opportunity to say directly to our auditors, do they have any concerns for the auditors to ask the the board president, on behalf of the board, do you have any concerns? It's just, it's kind of the point of an audit, is that there's supposed to be oversight and checks and balances. And that is a check, a balance. So I would hate for that to go away. I think it's actually an important thing, just an important touchstone piece of the puzzle.
And I agree.
Yeah.
And I do think that's still coming for this year,
Yeah, okay.
just so you're aware.
All right. Any other comments on the audit? All right, 4.03, our budget update.
Okay. So I did attach to the agenda a copy of the budget document that has information, and it's also posted on the business office page of the district website in a more interactive format than a PDF. But for our general fund, it has historical information as well as the current year budget and the budget for 26-27 by function and object level for the general fund on a comparative standpoint to show more detail as to what's in those individual line items in the budget, as well as some other supplementary information that we include in the larger budget document that we've been publishing each year. But tonight I just wanted to go through some information from a slide deck perspective. And I will preface just to say we haven't made any adjustments to the budget versus last month. So the numbers you'll see tonight are similar to last month. We do have adjustments coming. There were some things like the budget, the operating budgets for the external schools that we didn't have in place, and a couple other things. And rather than doing one or two small adjustments, I'm going to aggregate those together and present those as part of April. But again, I think the consistent comment that we made last month was, we have about a $750,000 deficit right now, and I feel comfortable that we'll be able to, through reviews that we'll be doing in the next month or so, be able to bring that number down to balance the budget, and then seeing where the final numbers lie when we approve the final budget in May. So tonight's presentation, I just wanted to kind of tie back some pieces in the budget, and the main three items that we kind of pillar our budget around our initiatives and being achievement, belonging, and wellness. And I included what some of those things are in each bucket in the presentation tonight. When we're looking at belonging and our emphasis on our identity and the dignity framework we've been working through, and how that's going through our teaching and learning department, our student services department, our HR department, and really it kind of touches on every department, even down to our support services, where the belonging initiative is very important in things that we do during the year. So there's a reflection in the budget of those initiatives and fiduciary commitments to that as part of those individual budgets. The wellness initiative, there's inclusion in social emotional support, the facilities plan that's supplemented by the general operating budget, but is also factored in with the capital projects budget, as well as what we're doing at ITHN. And it's, even though they're separate funds, it's all one big picture when we're looking at the overall finances of the district. And then our achievement, which is related to our teaching and learning department, but then also includes all of our other departments when it comes to, what we're providing to our students. And we're looking at, different audits of programs and things that we're doing from an achievement standpoint across the district to maintain the high level of education that we do here in the district. So just provided a year-over-year summary here from the different sources to see where the increases occurred in each of those categories. And again, looking at the bottom line of the $743,000, $357 deficit that we have right now. and then what impact that would have on our ending fund balance, which is sitting at just a little over $33 million. Again, we have a portion of that committed for upcoming capital projects that we've presented in the capital plan, as well as some reserves for curriculum and technology initiatives. And then that fund balance also includes 8% of an unassigned just for contingency purposes. If we, needing cash reserves on hand should something unexpected happen that we need to have those in place for. And that 8% is a statutory limit that we adhere to. My goal at the end of this is always, as we've done over the last few years, is to present a balanced budget, which I feel fortunate that we're able to do that here, where many other districts will have to present a deficit budget, and they're starting out utilizing fund balances even before they get out of the gate for the fiscal year. So again, for $743,000, I feel very comfortable that we can get that down to balance the budget and do it in a way that's not going to impact things, from a programmatic standpoint for our students or even our staff across the district. So just a summary of our general fund revenue. We've discussed this at previous meetings, but just our reliance on local sources, on our community, on our tax base to provide the resources that we have here in the district at almost 84% of our budget. And then, our state sources being at just under 16%. The bulk of those state sources, as you'll see, is made up of Social Security and pension reimbursement. So when you back out the statutory reimbursements for 2 fringe benefits that we were paying out, the actual money that we're getting from the state is probably closer to 7 or 8% of what we receive to supplement all of the, special education, regular education, transportation, the things that those specific subsidy buckets go towards. Our federal revenue, it makes up, on this slide, less than 1%. When you factor in the IDEA funding that we get, that actually goes into local sources because it's passed through the intermediate unit, so we have to record it as a local source. It gets that closer to 1%, but our federal contributions are very, negligent as far as the overall percentage in our budget. I was trying to think of the best word, and
Negligible, but.
yeah, I was trying to
No,
be
you
as
meant
nice.
negligible, but negligent
Yeah.
is not inaccurate.
I think maybe both apply, I guess. So from the revenue budget, we had looked at these last month, so nothing's really changed from the recommended 3.5% increase. And again, that's something that we'll work on as we bridge the budget deficit and what that final number is. And then, we made some adjustments to our transfer taxes, and those are variable, but they're also pretty consistent. We're not talking big swings there. If we're making adjustments, it's a little bit here, a little bit there. One area where I think I can make the adjustment is we did decrease our interest earnings assumption based on what the Fed is looking to do. They have a meeting tomorrow where they're anticipating no rate cuts. There may be 2 this calendar year. I can probably, safely and conservatively put that $200,000 that we took out back into the assumption, and based on where we're, currently at for this fiscal year, which will, really net us down to then a $500,000 deficit that we have to overcome just from that one adjustment. The state revenue, again, I talked about the pension, Social Security. We did include the PCCD grant funding that we've been using for some first mental health and now some safety upgrades across the district with our secure vestibules and some of those security items. And then in the Ready to Learn funds, you'll remember last year in the budget, there were a number of school districts that received adequacy funding across the state. Starting with the delayed budget approval that was approved, late in November last year, and then in the budget proposal for next year, they're proposing giving every district $50,000 as a minimum for the adequacy. So I did include that $50,000 in our numbers. again, it's a small amount, but just to accurately reflect what's in the current budget and anticipated for next year, I did make that adjustment. And then our federal numbers, there continues to be some fluctuation there, and I have a slide to outline that. The overall state budget, what was proposed by the governor, which may not be our landing point, but there were some modest increases to basic education and special education, which would net, about a $47,000 increase, for the district. And then, they had $125 million in investment in school facilities grants, which we would apply for, and then $100 million in safety and security grants, which is the ones I talked about through PCCD, which we received about $162,000 this year towards those initiatives. And then from a federal perspective, the Title I through IV grants that we receive, you can see, the largest of which is Title I, which we get $250,000 for. The other three are, $66,000, $22,000, and $21,000 respectively. And then the IDEA money, which I had talked about, which is in local sources, it's technically federal. We reported as federal on a schedule in the audit, but it goes through local sources, including that. And then we get reimbursement of Medicaid eligible costs, and we budget an amount for that as well. So about $1.1 million from all of those sources on, $130 million budget. So just to put that in perspective of what we get from those federal sources. I think those numbers are pretty reliable. I don't see any, based on everything that's been going on, in the last year or so, the upcoming 26 federal budget is secure. It's anything beyond that. So, based on what happens in Washington, we may have a different conversation, down the road. But most of these numbers are pretty secure, and there may be some minor fluctuations to them. Then I just provided a summary from our general fund expenditures in those major categories, the two largest of which is our wages and salaries and employee benefits. And then on the next slide, I provided just by our major functions. So we have, again, in our chart of accounts, all the different numbers that designate, is this an instructional salary? Is it a special education benefit? It's all broken out. So the instruction covers all of our, instructional categories, whether it's regular education, special education, or budgets that were approved, that we discussed earlier. All those things go into that. And then the support services would be transportation, technology, principals in the schools. That's broken out separately than the school instructional budget, the business office, all of the support services. The other is our debt, and then we have a small amount in non-instructional, which includes athletics and some other categories in there as well. And then just from an object standpoint, it's just kind of a further illustration of, the largest expense being our wages and salaries, and then the next highest being, in other uses of fund that captures a portion of our debt service as well as the other objects. So that's also fund transfers and anything that's beyond what you consider an instructional or a support ancillary type of expense. And then the next slide is just to show what that looks like historically. And you can see, when we look at this, from a big picture, we look at it, in the detail, but also from a 30,000-foot view. Like, does it make sense from year to year? And you can see, our wages and salaries and our benefits, they increase kind of on a consistent trajectory every year. The outlier would be in our other uses of funds for fiscal year 25, but we had a large transfer to the capital reserve fund. So that larger orange slice in that middle year makes sense because it gets categorized there. But even when you look at the smaller ones, you can see, there's no large swings from year to year. So if we're looking at this just from a reasonability standpoint, nothing stands out. Or when there is an aberration, when we have a large transfer like that block of orange, it makes sense as to why that's in there. The overall expenditure budget increased by 4.6%, which is similar to last year's increase. The salaries being in their category 3.6%. That's including really our budgeted contractual increases, our current staffing. We're doing reviews now of any staffing adjustments that we want to make. That's kind of the second phase of our budget process. We do the initial salary budgeting based on current staffing levels and needs that we know at the time. And then we do the refinement in the spring for looking at some of that in more detail and where we can make potential adjustments for the following year. But really, there's not a whole lot of difference between, from a number of personnel standpoint from last year to this year in what we're presenting. Our benefits, we did include a 6.7% increase for medical benefits. We are going to be reviewing our final rates from the Health Trust, looking at what we have budgeted as far as a buffer to help us smooth out those costs, so if we have high numbers, we're not absorbing very large increases, in particular years. So that's something we'll be working on in the next couple weeks to see if we need to make any adjustments there. Our prescription at about 4.8, and I think that number on the prescription is probably an accurate number based on data that we've been seeing. So we did just finally get our Prudent RX program with our bargaining units implemented in full. So that'll start to ratchet up, and we should see some savings, potentially next year, but definitely into subsequent years of, the utilization of that program and some extra savings through those rebates in that Prudent RX program. So we're going to look at those rates, and then just from the pension standpoint, the rate did decrease from PSERS down from 34% to 33.59, but because the wages have gone up, it wasn't enough to show a decrease. It just lowered the increase because of the rate portion of that calculation. I included the next slide just to show from a categorical standpoint, different positions and how we have them in our classifications on objects. So, administrative and other costs in the bottom number and then going up, and it's ordered based on the number. So like the object 110 is administrative, 120 are teachers. So it kind of follows that logic from bottom to top, and then we have some of our support positions in some of those middle buckets. But just to kind of show the breakdown, which it makes sense. Our largest cost is our instructional staff for our students, and that's captured in this and illustrated in that number. And then I did the same, just a little bit differently, to show our benefit allocation. And just because of the coding and how our insurance is structured, the blue number, which is our group insurance, includes our medical, but the orange sliver, where it says health benefits, is our RX is included in that. And it's just because of the numbering sequence of how we have to account for those. One thing that we are going to look at, and just kind of aside real quickly, is in our financial software, we have a finite number of characters to enter descriptions of what our accounts are titled, and every one of those little components has a descriptor, and then it gets combined together into a large account. We take that information to put it into our budgeting software, and it has to match up because of mapping when we import data. What we're looking to do with the software company is see if we can remap some of those descriptions to make them easier, because I'm looking at this, understand, like, why wouldn't our medical be in health benefits? Why is it in group insurance? And it doesn't make sense, and some things are truncated. So just from for the reader to make it easier to digest, we're going to work with them to see if we can remap and redescribe some of those areas, which would still allow us to import the data correctly, but make it more user-friendly. So that's something that we're going to look at over the next couple weeks to months with them. Just wanted to highlight, as part of this, we always discuss our class size recommendations and how we've been adhering to that, and just taking some data from our most recent data document that we've published on what our elementary class sizes are. And again, we adhere to that as part of the budgeting process when we look at our elementary staffing levels, and making sure that we're adhering to those class size recommendations for below 20, preferably for K3, no higher than 21, and then average of 22, no higher than 25 for grades 4 and 5. So again, we always are considerate of that when we put together our staffing recommendations as part of the budget. The other thing that we do is we ask all of our major departments to provide some information on things that they're highlighting as part of their budget. So we tried to summarize that. A lot of professional development going on across the district to make our educators and our staff better equipped, and better prepared to deal with the things that are part of their jobs every day. So whether that's part of our belonging initiative, instructional practices, social emotional learning, that's all included in that. Our pupil services for special education services. As far as teaching and learning, we are looking at updating textbooks for social studies, the health program at the high school, and our world languages. So we do have a cyclical rotation of when we look at our curriculum for each of those subject areas, and we have a schedule of when those materials are evaluated and if we need to buy new materials as part of that. The technology department continuing to look at our one-to-one offerings and what we're doing in those areas. As well as looking at our phone system and some upgrades in our server technology. The building and grounds department, not a whole lot of changes there. I think we're really focused on maintaining. We did institute last year bringing the grounds department in-house, which I think has been a very positive thing from not only a cost perspective, but from a service perspective. And I think they've done a great job making sure that our facilities look fantastic, and that's been a big improvement. And thanks to Mr. Morris and their entire team for putting that together. And then our people services department and making sure that we're providing the free and adequate public education to our students, and looking at all of those services that we have to provide to our students that have IEPs across the district. So when I look at the budget, I don't think we're taking any big swings on anything this year. There's a lot of maintaining a lot of things that we're doing, continuing those things, wrapping some of those things up, and just all of the day-to-day things that go along with running a district our size. So there's nothing in here where we're taking a huge initiative, and I think we've done a lot of that over the last few years. And not that we're taking a break, but I think we're just kind of trying to continue on with the momentum that we've been doing in those areas. This slide we reviewed at the last meeting. It's really just a summary of our debt service and our fund transfers. Nothing's really changed there. The numbers in red are the total amount to total the $11.3 million for the Ithan project. And so, I don't anticipate any major changes there. I may, evaluate our transportation budget with Mr. Daniele to see, what we're needing there as far as the transportation fleet. We'll look at those contingency positions as part of our staffing evaluation to see if, what we need for next school year. Those will probably be the two main areas that we look at, but the rest, the debt service is pretty, it's a fixed number. There's not going to be a fluctuation to that. And then I just provided the debt schedule. And I was going to bring it up at the end of the meeting, but I will do it now because we're on this slide. I did talk to Zach Williard from PFM today. We were just catching up on some things. And just knowing we've approved the bids for the Ithan project and we're moving forward. As you know, in the past when we've done borrowings, we've come to the board and asked for a parameters resolution which sets the guardrails for the borrowing and then gives us the framework for which to go out and do that. We want to present that possibly in April to set that up, and then that gives us a longer runway into the summer. Should the market conditions become favorable, should things on the outlook be looking to not be favorable, gives us the ability with our underwriters to kind of jump on the market and issue the bonds as part of that fourth phase for the Ithan project. So it just gives us some flexibility since we're committed to the project that we can kind of move when we feel it's the best time to do that. So I did talk to Zach today, and he should be attending our meeting in April to kind of discuss where we're at with everything and what the game plan is moving forward with that. It just gives us more flexibility and options, and it's probably the best move to get out in front of that and just give us as much flexibility as possible. We reviewed this slide last month as well as far as the historical increases to the real estate millage rate. This next slide, I included this last year, and I didn't provide updated information, but we looked at this last year just comparing, our district, and if we had a home valued at $1 million, what that would look like in neighboring communities from a taxation perspective, and then what the tax base looks like. And just looking at our overall residential tax base compared to a district like Upper Merion, what that looks like to Lower Merion. And again, this is not to say anybody's doing anything right, anything wrong. This is just the data of what is comprised of that. And then also between Tredyffrin Easttown School District being in Chester County, Lower Merion and Upper Merion being in Montgomery County, if we had a home that was valued at $1 million because of the common level ratio in the counties, what that would equate to the assessed value and how the millage rates equalized and kind of how we compare, which, when we benchmarked this last year showed that we were, in a favorable position for somebody, that had a home valued at $1 million of, those to similar communities. So I just wanted to illustrate that because I think that we discussed that last year and it kind of resonated with everybody a little bit. And so I just wanted to kind of include that for contextual purposes. The tax impact up to 3.5% and then 3% and 2%. Again, we reviewed that last month. The Act 1 projections, I included that. Nothing's changed there. We don't have any updated data, but again, looking at projected Act 1 numbers on the next slide. Sorry. Oh, it's okay. I didn't want to elbow you, but and the forecast being in the low 3%, hovering around 3.2, 3.33% for the next few years. Some things we talked about already, just looking at economic conditions at the state level, federal level, looking at staffing shortages, looking at where we're at and how the finances relate to the bond rating, as you said earlier, Mr. Lee, with the upcoming borrowings that we're doing and making sure that we're in good financial position for those, and then doing those final budget reviews moving forward. The calendar, so our next real target date is April 7th, where we'll present the proposed final budget and then ask for approval in April, which would then allow the 30 days required to pass the final budget on May 26th. Just put a link on here where there's some information. We did publish the book on the preliminary budget, so there's more information there, and just the link where people in the community could access that, as well as the presentations from our finance meetings. And with that, I'll open it up if there's any questions.
Okay, sure. Yeah, I can open up things. So again, want to commend Mr. Pawling again for being proactive and getting us ready to issue the debt. I think that's really important, especially nowadays. So the economic outlook has changed, I think, quite a bit over the last month. The Fed's favorite indicator, the PCE, the core still remains elevated, still well above what their target is. So I feel at this point, probably 2 at the beginning of the year seemed reasonable. Now, much less so. You know, we may even just get 1 or none.
Yeah.
There's a lot of discussion about, you know, stagflation, for example, rearing its ugly head. And so one quick thing, we discussed this briefly, was that, you know, in the news, there's a lot of drying up of private equity. So that's more like an economic outlook. And there are a lot of hedge funds, or just Blackstone in particular, they're denying client requests for withdrawals. So that these are potential canary in the coal mine type of thing. And so I feel like, you know, while the Fed controls short-term interest rates, we are going to be borrowing on the long end, you know, the 30-year mainly, maybe even the 20. I don't think that's going to come down, but either way, the Fed has no control over that.
Right.
So I think it would be prudent of us to do this sooner than later. So I just want to make that quick comment.
Yeah. Yeah, again, it gives us much more of a runway to, you know, and we work with PFM, we also work with our 2 underwriters, and we're always monitoring that to see, you know, what those economic conditions and the outlooks are going to be, so that once we have the resolution in place, we have the authority to say, okay, you know, we're seeing some things we like or we don't like, we can get everything kind of prepared ahead of time and go out as soon as possible to do that issuance. We also look at it, you know, we just don't decide, oh, yeah, this looks good. Like, we have a whole cash flow schedule for the project. So that comes into account, too. Now that we're actually starting the project, we're going to have a lot more money going out to pay the contractors, which we didn't up until this point, which is why we did some smaller borrowings on the onset, and we have some larger ones anticipated. So we look at all of those things as well to say, what are the economic factors, as well as what do we need from a cash flow perspective, and kind of balance all of those things together.
And then, so in continuing in that vein, you know, one thought was some who may be watching this or whatever, thinking about, you know, if we're going to continue to, you know, get debt, is that problematic potentially? Would we be seeing, like, you know, negative cash flows or whatever? But at the end of the day, you know, the investment income that we're getting fairly offsets the debt, or at least at the current interest rates.
Yeah, and so there's two portions of it. So there's what we borrow or what we have to invest in the general fund, you know, as far as what's in our operating budget. And then in the funds that we get for the bond issuances, because it's tax-free bonds that we issue, we have what's called an arbitrage factor as part of that. We can't take out debt and earn more interest on that than what we issued the debt for. So there's a whole calculation. So we can earn up to that, and we utilize that and as part of the savings, and net that out, so we can earn interest up to that borrowing, you know, that bond rate, the yield rate, and so that's part of the calculation on that as well. So if the short-term rates allow us to do that, it can get us up to the amount of the arbitrage limit of, you know, what we borrow. So that is an offset to that as well. As far as, you know, when we look at this, we look at the cash flow from the operating budget of what we can repay the debt for, and then, you know, what the cash flow going out from the specific money that we're issuing the debt for as far as the construction project. So I think we have a good handle on all of that, of when we need the money, when it's going out for the project, how long we're sitting on it, and then what we're going to be repaying the debt for over time in our operating budget. Yeah.
Right. So just actually, I'll just go back to the prior point. So my comment about the Fed and the changing economic conditions. So at this point, I feel comfortable taking one rate cut off of the budget.
Yeah.
Not necessarily 2, but I think 1 is probably safe, and that's about $100,000. So that's just my initial thought. Secondly, is that by incurring, you know, like by issuing the debt, I don't think we're putting ourselves at a disservice, because we are largely offsetting that with investment income. And therefore, you know, our balance sheet may look not that, you know, like bloated. And I'm not saying that it is.
Yep.
But the whole point is that, we have cash on hand to fulfill our obligations in building the new Whiten.
Yeah, and part of that goes into when we have our ratings call with Moody's, and we've been upfront with them about what the long-term plan with the project has been. So as part of our ratings, calculation, they take that all into account. So they know what we're doing with Ithan, what our year-to-year cash flow and our economic outlook is. They know what we have in other capital projects and what reserves we have for that and the replenishment. And, they've, confirmed our AAA rating. So I think we get some kind of validation from them as well, that if they're seeing something from a more global picture that they have a concern about, that's another check and balance for us to say, hey, and then, that's something that we need to look at. And that's all part of that conversation with them and then with our financial advisors and with our underwriters.
So just to kind of add a little more color, whether people may realize or not, like the GFC, the Great Financial Crisis that we underwent, a large part of that is actually due to liquidity crunch. So I don't want our school district to be faced with anything like that. That's why, the issuance of debt, while at this point is probably favorable, we should do it sooner than later to avoid that one risk, which is liquidity risk, which actually did take down quite a number of companies. It's because they didn't handle their cash flows properly.
Yeah.
Okay. No, not
No,
enough.
they couldn't get it.
Not enough.
Yeah.
Couldn't get the
Yeah.
Yeah.
I mean, there were counterparty
Get it.
risks, but that's not what we're about. It's liquidity.
I thank you for everything you've done. I really only have one question, and you may not, if you can easily answer it now, great. If not, just maybe next week.
Okay.
I'm just trying to reconcile page 10, the 1.166 million from the federal government with the 800 and change that we're getting, the 831. And I know that I understood your explanation about the IDEA money, but it doesn't, the numbers don't match up.
Yeah, so there's a portion I didn't include on there. We get, how we get rental reimbursement from the state for the old Plan Con?
Yes.
We have some bonds that were issued in 2010 or 11 under a federal program. So there's actually a portion that gets coded under federal for bond reimbursement that I didn't include in here because it's kind of like specialized. So that's where you're going to see the discrepancy between the IDEA and the QSBC reimbursement that we get. That's why.
So really, the total general, on page 10, the number is really higher than 1.166, so when you back out the 600 for IDEA.
Yeah, that's where it should
So it
balance
must be
out.
about
Yep,
250 or
correct.
300,000.
Yep. That's,
Thank you.
Yeah, that's the portion. I didn't include it on here because it's kind of like one-time specialized, not one time, but it's for a specific item. It's not really, it's fixed. It's not dependent on anything that's kind of going on with the federal government right now.
Right, and my other question is less about the specific budget and more just want to circle back on something that it's, kind of been the thing I've championed the last couple of years. Just trying to understand and get an update at some point, the status of our attempts to rein in our prescription costs.
Yeah.
And I know we're working with an outside consultant. I know there's been work that's been going on behind the scenes, not necessarily relevant to tonight's budget discussion, but I do want to circle back on that because I think it's really important, that we continue to have the conversations about understanding that if there are places where we can save money, that, particularly if they don't cost our employees anything, that we continue to work on those cost savings where we can and how we can. And that was a big one. We had a couple of years in a row, Mr. Lee, where we had $500,000 or $600,000 increases year over year on prescription cost. It exploded. And I see the percentage-wise, it seems to be down, but it's still significant.
Yeah. And just
so-
to your point, we met, Mr. Stitzel and I, with our consultant, and we were planning on giving either the committee or the board an update in the next month or two on where we stand with the RX and the medical and everything we've been working on with him. So
Great.
we will have more information on that.
Super. Yeah,
Yep.
it was less about the budget, but more about that. I just don't want to forget to
Yeah.
circle back on that.
Yep,
Thank you.
absolutely.
So I just want to make sure, the prescription, the name of the company again is?
So we started participating, we worked through CVS Caremark, but we just implemented a program called Prudent RX, where it's basically, we get a direct benefit on specialty drug rebates through this program. So there's a minor modification on how our members get their benefits, but we get a better rebate back on some of those specialty medications as part of that. And so we presented that information to our bargaining units, which they approved through an MOU. And it's actually, if they, utilizing this program, if our employees sign up, there's zero copay to them to do that. But then the district also receives some additional rebate benefits as part of that. So we were anticipating about $200,000 to $250,000 of savings once we kind of hit, full utilization of that program.
Okay, no, that sounds great. So it's definitely a step in the right direction.
Yeah, and so we're just kind of in the infancy of it because of the process to get everything up and rolling. So we probably about a month or two into it. So as we get a couple months or full year of that, we'll be able to to quantify what those savings were over that time.
Okay, so maybe some anecdotal comments is that, one, my personal experience is that I used, I have my own prescription drugs through my company, but I also use Good RX.
Yeah.
It's a free program. You can pay for it as well, premium if you want to. But I actually get my prescription drugs much cheaper through Good RX, which I don't pay for.
It's similar to that. That's
Okay.
what this program
Okay.
is. Yeah.
Okay, good.
Yeah. So again, it saves the district money, but also on those medications, our employees don't pay the copay as part of that. So there's a mutual benefit, and again, it's how the rebates get channeled back to the recipients, and through that, it's a similar program to that as far as the benefit to both sides. Yeah.
Ms. Girton, any?
Thank you so
at
much
this
for
point?
all the hard work.
I'm going to defer my questions because of the time. I want to ask you about item 4.03. No, sorry, 4.04. Can we table that? Is it possible to table that item, or do we need to discuss
I would say
it?
if you can allow me 7 minutes till
Okay.
the end of our meeting, I can run through that because that is a time-sensitive
Okay,
item.
you
So,
got it.
Yep. And if you want me to, I can jump right into that.
Yes, please, I thought you were.
So we had this on the agenda for the Facilities Committee, but because of timing, we had to add it to our agenda this evening so that it would go through committee level before we present it to the board next week. And what it is we're asking for approval of a development agreement between the district and the township for the Ithan Elementary School project. And basically to 30,000-foot view summary of this is when there's any type of development in the township, there's a development agreement that's required that basically escrows money in an account so that should the project not be completed, there needs to be something put aside for restoration purposes, not leaving, partially constructed building or renovated building. So we have been in discussion with the township because we did a similar agreement with the high school project. And the township will calculate based on their estimated cost to the scope of the project and what that restoration might look like. They will present us in an estimate of that. And then through the agreement, we secure a letter of credit to escrow money through the project term till the end that sets that money aside should it be necessary. The original estimate was $9.5 million based on the scope and size of the project. We were drafting the agreement based on that amount, and then we just had a discussion with the township through both of our attorneys, and they presented us a reduced requirement for the letter of credit from $9.5 million down to $2 million. So I did provide each of you a hard copy of the revised agreement with the $2 million. It is still going through final legal review, but this agreement is the template that we used for the high school project. We just made edits relevant to the Ithan project, so we don't anticipate there being any issues going through. It's been reviewed on our side, the township, and through Mr. Rice will be reviewing that as well. We're just waiting for final review, which we're hopeful to have by next week. But regardless, we need to have an agreement approved by our side to proceed with the project and having this established. We did set up the letter of credit through Mid-Penn Bank, who's our main depository. We originally had it set up for the 9.5. When we got the adjusted amount last night, I reached out to them. They were very able to adjust the amount down to $2 million. So for the fee for that, the establishment of the letter of credit it's a 50 basis point fee, which is 0.5%. So in this case, it would be a $10,000 upfront cost to establish the letter of credit. And then for each year that we have that, there's an annual fee of 25 basis points or $5,000. The other requirement is that we have to have cash collateral. We already have $2 million with Mid-Penn Bank, so we're just going to portion that off into a separate account. It's still interest-bearing, so it's not money sitting in an escrow with the township. We're still earning money on that to offset the fees for the letter of credit. And then if for some reason we get, a year or two into the project and, we're near substantial completion and we can reduce what's required because it's nearing, before we have to do the second annual revision of this, we could potentially reduce that and, save those costs on the back end. So it's a requirement, but I think, with the willingness of the township to reduce that and then, the nominal rate that we got through Mid-Penn, who's our main banking partner, we feel we have everything in place and we should have everything hopefully finalized by next Tuesday, but wanted to present it tonight to move forward because of the timing of needing it in place to proceed with the project.
Was this our Whistler Pearlstein attorneys or our Saul Ewing attorneys?
So was it Saul?
Yeah.
Yes.
Great. Would you please thank Mr. Falcone?
I will. Yes, thank you.
Give him my personal thank you for whatever negotiations, because that's, the basis points for that would have been a lot more money.
Oh, it saves,
Great, thank
up front,
you.
it saves us about $38,000.
So,
Yeah,
please give him our thanks, my thanks.
Sure.
Our thanks.
so, okay, I did it with 2 minutes to spare unless there's any
Awesome.
questions.
And, yeah. Please ask if you have any questions. I mean, yeah, this is important information.
Okay.
All right, thank you. That brings us to new business. Any new business? Seeing none. Any public comment? Seeing none. Our next meeting will be on April 7th at 5 p.m. in this room. Thank you, everyone.